In trading, a successful strategy often combines both analysis and discipline. Here are some of the most effective trading strategies used by professionals. 1. Trend following goal. Capitalize on market momentum by trading in the direction of the trend. Method. Identify trends, uptrend or downtrend, and enter trades in the direction of these trends. Tools. Moving averages, MA, Relative Strength Index, RSI, and MAD. Example, buy when the price crosses above a moving average or when the MAD indicates upward momentum. 2. Breakout trading goal. Enter trades when the price breaks through a support or resistance level, expecting increased volatility and momentum. Method. Wait for price to break a key level and then enter in the direction of the breakout. Tools. Support and resistance lines, volume indicators, and Bollinger Bands. Example, buy after a breakout above resistance if volume supports the breakout. 3. Range trading goal. Profit from predictable price movements within a set range, sideways market. Method. Identify overbought and oversold levels to trade within a defined price range. Tools. RSI, Bollinger Bands, and stochastic oscillator. Example, buy at support and sell at resistance when the asset is trading within a range. 4. Scalping goal. Make small profits on very short-term trades, often within minutes. Method. Enter and exit trades quickly to capture small price movements. Tools. High liquidity, tight spreads, and fast execution are critical. Example, using a 1-minute chart to take advantage of tiny price movements, typically within a strong trend. 5. Swing trading goal. Hold positions for several days to capture swings within a trend. Method. Identify and enter trades at turning points within a trend, aiming for the middle portion of the price movement. Tools. Moving averages, Fibonacci retracements, and trend lines. Example, buy when a retracement in an uptrend hits a support level and resumes the upward movement. 6. Position trading goal. Hold positions for weeks or months, trading based on long-term trends. Method. Identify major trends and hold positions until there are clear signs of reversal. Tools. Moving averages on longer timeframes, e.g. daily, weekly, economic indicators, and news events. Example, buy and hold based on economic indicators suggesting a long-term uptrend in a currency or asset. 7. News trading goal. Capitalize on significant price changes following news or economic events. Method. Trade immediately before or after news releases that are likely to impact price. Tools. Economic calendar, news feeds, and sentiment analysis. Example, buying or selling based on key earnings releases, central bank decisions, or geopolitical events. 8. Algorithmic automated trading goal. Use preset algorithms to automatically enter and exit trades. Method. Code rules for entries, exits, and risk management, often using machine learning for data analysis. Tools. Trading platforms with algorithmic support, coding knowledge like Python, and API access. Example, create a bot to enter trades based on specific signals, e.g. RSI crossover. Tips for all strategies. Risk management. Use stop-loss orders and position sizing to limit losses. Backtesting. Always test your strategy on historical data to understand potential performance. Discipline and emotional control. Stick to your strategy without reacting emotionally to market movements. Choosing the best strategy depends on your trading goals, time commitment, and risk tolerance. A combination of strategies can often provide balanced results and help adapt to different market conditions.